Have to be prepared that he cannot go full bore on this idea of we're cutting rates. He's got to reserve judgment for the committee, got to reserve flexibility for the data.
You just said it sounds to me like his mind's made up. He agrees more with Kudlow that they need to cut rates now.
I've been listening to nearly every word said by the committee, even while I was on vacation in Cape Cod, catching fish. I was reading Loretta Mester. I was reading all the stuff out there. Nobody is pushing back against where the market's priced. They need to do that if they don't want to see a big disruption, a la Nigerian that he was talking about. What happens if the Fed doesn't
just
deliver?
printed 250,000 jobs?
Dwyer's right.
What is? But what is?
Dwyer's right.
No. So you're getting to what's most relevant in this conversation. Okay, they cut, they don't cut, they raise, they raise. Forget that for a second. The ECB
can't forget that.
The ECB is going to enact. Well, here's what's mattering. And Stephanie highlighted it. Globally, central banks have never been as accommodative as they are right now. The ECB is going to actually go out and buy corporate bonds once again. Let's say Josh is right, and the Federal Reserve doesn't give you a 25 basis point cut. You're going to get a temporary sell-off in the marketplace. Let's say Josh is wrong. The Federal Reserve gives you a 25 basis point cut. You're going to see stocks rally. You're going to see asset prices rally. That's what matters most. What also matters is this avalanche of notes that we're seeing from the wirehouses, the investment banks that say, sell equities, take down your exposure. I disagree. I see the opposite. Look at Netflix today.
You're talking as though that's widespread.
Okay.
Morgan Stanley may be saying that, going underweight to the lowest level in 5 years like they did yesterday on global equities. But not everybody's doing that. In fact, they are on an island almost by themselves.
But we are defensively positioned in the market.
I got UBS today saying they're overweight stocks.
Good.
Yesterday was J.P. Morgan and Citi who said buy dips.
So where I lean more towards UBS is when I see stocks like a Netflix, which we have dismissed, and I've been one of the people who have said temporarily forget about the FANGs. You've got Amazon trading at 1976. I think 2050 is the all-time high. Very quietly, Amazon today at a high for the year, approaching 2050. Netflix, 382, 385 is a high for the year, 419 all-time high. So some of those FANG names that we had forgotten about, they're beginning to participate once again. That's not an environment that indicates that this thing is going to free fall and we're going to go into a sell-off.
What if so when's the meeting? In a couple weeks?
Yeah.
All right, so what if we get our act together again, the bulls, the market
It's funny if we make a new all-time high.
Make a new all-time high going into a rate cut?
I don't think the all-time high or not makes that much of a difference to the Fed. I think that, extreme market moves like being down a lot matters. It's a sort of asymmetric
Are financial conditions
approach.
stressed? Do they
the Fed cut rates in 1995, and the stock market made an all-time high that day, the day they did it. So it's not unprecedented.
And also 07, I think, it was at an all-time high.
Let me finish my thought. The reason they cut rates in 1995 was not because the economy was in bad shape. In fact, it was phenomenal. They were undoing some of what they had done in 1994. So if that's the justification for this, that they think they went too far in December and all this is a give back, it's forgivable. It's not like people are going to say, the Fed has lost control. So I'm not like 100% anti. I'm just saying it's way more about optics and trying to please the stock market than it is about
we need
to get money into the economy.
Josh, give me a single company that has said so far in any of their earnings reports that we would be borrowing money and building new plant and equipment
that's not what's
if interest rates were lower.
They'll buy back more stock.
We've got two different conversations. One is whether a rate cut is going to boost the economy. There's good evidence to suggest it won't in any great manner. The other conversation is to whether it's going to boost the stock market. That's an entirely different
Or has already.
Yeah. I'm on the other side of Joe on this. I think you get a flash from the cut, but I think that the more determinative thing is going to be the earnings.